Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. This is another edition of Market Talks with Dr. Stoxx. It is July 28th, 2:11 p.m., and we're looking at a fairly weak market today. It started strong. Not exactly sure what happened, but we had some headlines coming out with Trump and co. meeting with China. Trump and co. Inking a nice tariff deal with EU, and then there was some saber rattling with Iran that was going on. And in addition, we're pricing in all kinds of earnings that are coming out this week. Most of the mags are reporting. A lot of big blue chip stocks are reporting. And then we also have GDP, all the jobs data coming out starting tomorrow. FOMC is going to announce on Wednesday. They'll have their presser. That's going to move the tape quite a bit. We've got PCE prices, the Fed's favorite inflation read, and ISM also coming out. You just can't have all that in the same week, and the market is a little bit skittish. So the path of least resistance right now is going to be more weakness for the rest of the day, probably a gap down for tomorrow. And then we start to see some dip buying coming back in, heading into the big earnings. All right, well, let's take a look at some charts. Not going to do a whole lot with you today, and I probably will take some time to go over chart requests. So if you want to start typing those in over in the main room, I'll go ahead and look at those in a little bit. I apologize. I've been having some trouble with this microphone. Apparently, it's not sounding that great, and I don't have time right now today to change it. So it is what it is. We'll see what we can do with what we've got. All right, let's go over to some charts. So we're looking here at the TradingView chart of some of the indexes. We'll start with the S&P 500, and you can see we are in a classic bull market, up off of the tariff panic lows of early April. We had a few little periods of multi-day pullbacks, but mostly it's been sideways consolidation and then a nice spurt higher. Sideways consolidation, and we're right now in a nice spurt higher. We had a very nice week last week, a pretty decent week the week before. The problem that we're facing today is that we've got this gap and crap. So a gap and crap off of new all-time highs, which is exactly what we have today, tends to lead into a gap down the next day. Let's see if we can find a couple of examples here. Here is I don't know if that's not all-time highs yet, but that is a gap and crap, and then a little bit of downside for the next couple of days. The dip buyer came in after that, and it was nicely up from there. I'm not seeing any other gap and crap. Maybe over here. Here's a good example, right? Big up, gap and crap day, followed by big follow through the next day, and then you get the dip buyers coming in, and that's likely what we're going to see tomorrow, maybe for the next couple of days. As I said, the market's pricing in a whole lot of stuff, right? We've got all kinds of data coming out. We've got the Fed printing probably zero change in rates, but a lot of verbiage that will be closely parsed. And then we've got all the big mags, all the blue chip stocks, all the tech stocks giving out their earnings this week. Not all of them, but most of them. 36% of the 100 stocks in the NASDAQ 100 are reporting this week. That's a lot, right? And that's really a big dump on the market. It's also jobs week, so we're going to get jolts tomorrow. We're going to get ADP on Thursday, ADP on Wednesday, jobless claims Thursday, and then the NFPs and the UER on Friday. All kinds of things for the market to price in. It's a little bit skittish. We've got an EU tariff deal that came out over the weekend. We've got meetings going on right now with China trying to ink a deal there. And the market's just a little bit, it's not all there. Now, I think possibly what's happening today as well on the EU deal, because that really caused the futures overnight to go up, is that it's more of a sell the news event, right? We already priced in a good European deal. That's this move right here. Sideways consolidation, another nice move, right? They've already priced that in, and then when it actually happens, the market has to say, okay, we're at valuation, let's start to discount some things that are coming down the pike. All right, so that's the S&P 500. The NASDAQ is a little bit stronger because it is led by a higher percentage of mags in the top end of things. And it is still showing a green day, but not by a whole lot. It's off the highs. And most of the mags, as we'll see in a minute, are trending lower on the day. Small caps, not really super weak, but it is, again, a gap and crap. Now, what's going on in the small caps here is interesting because you can have these patterns within patterns, right? So here we have this inverted head and shoulders, which was the end of a long-term, over 2 years of downtrending for the small cap index, pricing in inflation, pricing in mostly inflation, and the Fed raising rates. And then we had the breakout, we had a retest, we had confirmation. Now we're getting this kind of larger pattern, which you can see right here. I'm not sure if I have that right shoulder in the right place, but we certainly have a left shoulder here. We have the same head, and then we have this little right shoulder that's forming. And this would be a much larger pattern. We also might even call it a big cup and handle, right? If we can just, and this is how, if you look at the chart of IWM in the market surge trading software, the market surge charting software, you're going to see that in the pattern recognition feature. So here's your big white cup, and here's a little bit of a handle that's forming. Either way, it's a bullish pattern. I think we can be reasonably bullish on small caps going forward because we're probably at peak rates. We're probably at peak tariff fear, and and small caps have been underperforming for a long time. They're due some catch up. So let's keep an eye on small caps. I'm modestly bullish, cautiously bullish on the small cap index. Let's take a quick look at gold because gold is printing an interesting pattern here. We've got a very clear range, right? Tops of the range a little bit higher there. And then we have this, inside that range, we've got this trend going on. A sequence here of higher lows, always a good thing to see. And we've got a modest, I wouldn't call this a reversal bar, but it is a hold, at least, down here in the pink zone, the 2.0 standard deviation of the linear regression channel. So, objectively, this is a bullish setup that's forming for gold. But when we expand our horizon out a little bit beyond just the chart, we're looking at a macro for gold that may not be very bullish, right? We've got the dollar's been a weak. That's one of the reasons gold is up at all-time highs, but now it's starting to bounce back. That's a negative for gold. The Fed is not going to be cutting rates probably anytime real soon. They really don't have any real reason to, because inflation is coming down nicely, but there are still some sticky parts of the economy that are seeing higher prices, and the jobs are still pretty strong. The Fed usually starts cutting rates, as I mentioned in the room this morning. The Fed usually starts cutting rates when they start to see warning signs in the job market. They raise rates when they see inflation, but they start cutting rates when they see people losing jobs. So we don't have that yet. There's a little bit of a tick higher in jobless claims, but they still have been coming in under expectations, and the overall unemployment rate is still low. So I don't think we'll see the Fed cut rates. Either Powell has to get out of office and someone else that is willing to cut rates comes in, or we start to see some weakness in the jobs market. And then when we see weakness in the jobs market, that's bad for the overall economy and bad for stocks. So I don't think we really want the Fed to start cutting rates. I know it sounds like it'd be great to get better liquidity, but generally speaking, when they cut rates, it's a signal that things aren't all that great in the overall economy. All right, let's take a look at oil is nicely higher today. And of course, that's not something we all want because we like our lower gas prices, and it's a tax on earnings power and margins for a lot of companies. I think this is also partly why the gold miners were so weak today. Really slashed lower. We were long the gold miners, got stopped out this morning in the live room. And that partly, I think, is because not only is gold weak, but also oil is rising, and oil is a huge headwind for the gold miners. Bitcoin started up, nicely up today. It was up about 2%, 2.5% at the highs, and it's been all trending down lower from there. But it is a bullish chart. We have this nice little pennant or flag or whatever you want to call it there, nice little consolidating wedge off of the all-time highs that hit a couple of weeks ago. It's been choppy, up one day, down the next, up one day, down the next, but it's trending straight across. So as long as we don't close below the range, and maybe we need, just to be fair, we need to make the range more of a flat range here, right? As long as we close within that range, especially if we can stay above the 21 EMA, I think we've got a good reason to be bullish on Bitcoin. And there are also all sorts of other tailwinds for Bitcoin that I think will keep a bid under any dip in that space. Ether got a lot of press over the weekend. It gapped way up, and it kept on going initially, and it got very close to 4,000, an all-time high. And it's all downhill from there. So you're going to see a lot of charts that look just like this, really looking strong, even some breakouts, and then just coming back in. Just coming back in because got a little too far ahead of what we know about all the data coming out this week and the earnings coming out this week. I personally think earnings are going to be pretty good on the average. So I think Facebook will be fine. I think... what's the other one? Microsoft will be fine. Google was good. It just, the market thought it was not so good, but I think the earnings were very good and the numbers are very good. And Apple comes out this week, and I think that's probably the one that's not going to be so good, and it probably will put a bit of a drag on the NASDAQ. All right, enough about Ether. The one chart that looks really good is the 10-year yield, because it's doing this nice looking consolidation here. Let me get rid of all these lines and add some new ones. So you can see that it is printing a sequence of lower highs, but also a sequence of higher lows, and it's starting to get really tight. Right in here, we're above the 200, we're above the 21, we're above the 50 as of today. And that's not a good thing for stocks, because it means bonds are falling, yields are rising, and that makes borrowing and corporate debt a lot harder to finance. So we don't really want to see that, but it is what it is, right? It's a pretty good looking bullish chart. All right, let me take a look at the mags, and then I'm going to jump over back into the room and see if there are any requests for chart, for my chart analysis. And if you want to start typing in ticker symbols, go ahead and do that. All right, so let's take these worst to best. We bought some Netflix this morning because I'll show you. It's well below the LRC, which is very unusual for the Netflix to get down that low. It came out with earnings, and the market wasn't happy with them, but they were, historic revenues and historic EPS. It's just that I don't know exactly why Netflix got crushed on earnings. Bounced right back the next day, and then further downside. Then we had this 3-bar reversal, right? This is a classic. This bar right here. This is Thursday last week. A classic reversal bar. A classic reversal bar after the end of a downtrend is it opens up inside the range of the previous day, travels south to take out at least 20 days of lows. This did more than that. And then travels north before the close to get above the open and back within the range of the previous day. It did that. There was a little bit of follow through the next day, and then it looked like there was some really good follow through this morning. You can see how high it got up here, almost 1,200. And then it, just with the rest of the market, has been coming back down. I think we'll stay above the recent range lows, which is like 1163. And volume is light as well today. In fact, volume is pretty light all around. Was heavy last week and light so far this week. So Netflix, I think, should be okay, but we'll keep our stop in place just in case. Microsoft, it was green nicely this morning, and now it's down at the lows of the day, and this is not looking very good. It's got earnings on Wednesday after the bell, and that would probably be the saving grace for this. But it looks to me like, we had the new all-time high. Here's your gap and crap. Couple of days of follow through to the downside. Bounced back last week. The market was pretty strong last week, so Microsoft was pretty mediocre. And then a gap and crap today. Will probably get some follow through down again toward 504 before earnings come out. Google was a big gap on crap on earnings. Earnings were very good, and I think Google will be okay. But there is some support down here at the 21, and a little bit of a sequence of range highs right now, about 185, 184 and 185. If we do get a multi-day pullback, that's the place where you would want to watch for a hold and reverse. I don't think Google will get that far down. I think it's just doing some consolidation of that earnings move. Apple is the one I'd be a little bit worried about on earnings. We've had 4 days of gap and crap, no follow through to the upside. It is printing a bullish, I guess we could call this I don't know what you'd call this, frankly. It's kind of a cup and handle. Here's your handle. The handle looks nice. I don't know about this cup. So pattern-wise, I'm kind of lost on it, but it is right up against a very clear line of resistance around 214. It hasn't been able to get above that or close above that. And it's just not looking so good, and Apple has not been doing that well on earnings. So I'd be concerned if I were long Apple. I'm actually long Apple in the long-term family fund, but not as a swing trade. I would be concerned if I were holding over earnings with the hope of a big rally. Now, of course, Apple is Apple, and it could come out with some amazing new information that the market hasn't priced in yet. But right now, the market's just not very excited. Facebook looked the best to me on this nice run up, a slow, soft pullback into the 21, a couple of days of breakout. It just hasn't been able to get back up to the highs of the day. It keeps falling down and closing near the lows. So it's got earnings as well. Wednesday also. After the bell, they will probably be very good. They could even, in fact, be the best of the mags. I think Nvidia will be great, but that's like 3 weeks down the road. But it's not showing me a whole lot of a pre-earnings enthusiasm. CRM is your second biggest software play, and it's the biggest in the customer management space, and it's just been a laggard. I did think that it was kind of getting some traction right in here and would do well above that little short-term trend line and get back above the 50, but today's not the day. Amazon is doing okay, keeps printing new highs. Avgo is doing really well, all things considered. So is Nvidia, and so is Qualcomm. Qualcomm, in fact, I think has, and we're long Qualcomm, we're long Nvidia, and we're long AMD, which I don't have on here yet. I'll show you that. So this is a nice looking inverted head and shoulders, right? Here's all your right shoulder. We're right up against big. Now here's the thing, right? Qualcomm's up at the highs of the day. Nvidia is up at the highs of the day. Avgo, not quite, but it's near the highs of the day. These guys are doing really well, but they're all kind of in the same space, right? They're all in the semiconductor fabless space, and they've all got strong AI components. So it's just a very narrow space that's getting all the love from the market today, and that's it. Those three guys, and let's add AMD, because AMD is not a fabulous play, but it is doing really well. AMD is just, did we hit our target, by the way? We have a 175 target on it. Come on, get rid of that. No, we're still 30 cents off the target. So I'm going to have to decide today whether we raise that target or not. We're in a long-term position with AMD, and 175 was our target, and it's almost there. So I'll have to decide what to do. Tesla is kind of in its own space today, but I tell you what, I don't think, I could be totally wrong, Earnings are already out. They weren't so good, right? The gap down on earnings. Musk did what he could to kind of gin up the market, but it didn't work. And then is soft bounce back to close the gap today. But I do think, I could be totally wrong, but I'm not buying Tesla here because I think this is just a gap close move and likely will roll over again. And I do think to 280 is probably somewhere in the cards over the next few weeks. I could be totally wrong. And if it gets up above that arrow right there, if we close above that arrow and close above this little cluster of highs, I'll totally revise my script. I'm just thinking in terms of technicals here and in terms of that last earnings and some other political headwinds which are playing on the tape. All right, so that's all I wanted to talk about today. Those are, I'm sorry, I don't really have a whole lot to show you. I can give you one quick look at my big upside growth list. These are all growth stocks, hot commodities, right? Everybody is kind of trading these on a short-term basis. They're the meme stocks, they're the Reddit stocks, they're the speculative plays. And you can see red all across the board. A lot of them are just not happy at all. There are a few down here that are okay, but SMCI, I'm not sure I'd call that a meme stock. Qualcomm is certainly not a meme stock. There are a handful of them down here at the bottom that are doing okay, but most of them are just ugly today. All right, so let's take a look here at what you're interested in. IoT, I mentioned this in the room this morning. There was a big flurry of calls that came through an IoT, and then it turned out that someone was posting the rumor. I don't know if it's a rumor or if there's some substantial evidence to this, but that it's a takeover candidate, and it was Apple who was interested in buying it. That's what was being played around on the boards. Now, whether that's true or not, these things can take on a life of its own. But when that kind of thing happens, and you see it substantiated in the options flow, let's take a quick look. In fact, I'm not even sure this will show up because I have my options flow set. Yeah, okay, there's nothing under 100. There's nothing over 100,000. Let's just remove that and see. Yeah, okay, so there's a lot of little guys. A lot of little guys buying calls all the way down, right? From 1054 this morning and still buying here at 2:30 in the afternoon. So this is interesting, right? You don't see this every day. You don't see this at all every day. But these aren't funds buying. These are guys like you and me that just happen to have pretty large accounts, and they're, buying quite a bit. Now, let me take that back because I'm looking here at the same expiration date and the same strike price, and there are a handful of, quite a few of them that are at the 200 volume. So that could be the same guy, and that guy is maybe a fund. I don't know. But back to the chart. So the chart is not that great, right? It's in a downtrend and it's underneath all kinds of resistance. But if this rumor does start to gain some traction, then this is probably the start of a pretty decent move. It's going to have some resistance here at the 200, and this little cluster here is going to be a volume shelf. But that's already 45, and it's at 40. That's a good 12% move from current price. So, yeah, to me, it's worth throwing a little bit of money at it just in case it really does. And if it's a buyout, it's probably going to end up in the mid 50s, I would think, at least, because it's a very valuable company. It's off its game lately, but under the auspices of Apple, it could really do well. So take a gander at it, but it's a lotto play at best. And it's really only moving today on a rumor. It's not moving because the market likes it for its own reasons, okay? Let's take a look at, we looked at Qualcomm already, and it looks very good, right? Qualcomm is I would even give it a buy. We're already long Qualcomm, so we don't need to add it. But if you're not in it, I would say this is a pretty good time. So MSTR is doing everything like the Bitcoin is doing today, gapped way up and then has come way down. But that said, it's in my mind, it's a pretty decent play. So we're long some calls in the options room. We got into those on Friday. and we're still kind of pretty much at our entry price here, so we're not making any money on it yet. But I have no plans to sell it unless we get stopped out. I think this is your breakout high up here. This is a pullback. It's not exactly a soft pullback. It's been a little bit questionable because of what's going on in Bitcoin. We saw Bitcoin is up one day, down the next, up one day, down the next, and it tends to be more down than up. So it's just pricing that in because MSTR is a play on Bitcoin, and that's all it is. But you're above the 50-period moving average. I would say a close below that level is problematic, but we're not there. And earnings are coming out, but I could be totally wrong about this, but I don't think the market cares that much anymore about earnings. The only thing that could move the market with this stock is its asset level of Bitcoin. If it is going up, it's good. If it's going down for whatever reason, I don't think it is. I'm pretty sure it's not, then that would be bad. So I don't think earnings are going to move the tape very much, and it doesn't matter whether they hit their estimates or not because it's not about the product. I'm not even sure they have a product anymore. It's just about the price of Bitcoin. So I would say if you're not into MSTR, it's worth throwing a little bit of money at it right here because of this nice pullback off the highs. It's come in, a good 15% in just a week and a half. So that's a big pullback. AMD. So we did look at AMD already. We're long AMD already, and we might need to move up our target. It's doing great. It's certainly a hold. I don't think I'd buy it today. It's a little bit top heavy, I would think. But man, it's just going gangbusters, and rightly so, because AMD has been held back for so long. It's got this amazing CEO. She's been there at the helm 10 years, totally turned the company around from being near bankruptcy 10 years ago to being maybe the next NVIDIA, and maybe even better than NVIDIA. So I like AMD as a longer-term play. I have just a little bit in my family fund, but been waiting for a dip to add, and it just hasn't dipped. But yeah, I like it. I really like it. Again, don't buy it today if you're not already in, but it is a hold. Just keep moving up your stops. Let's look at IONQ. Yeah, so IONQ and RGTI is another one I like, and QUBT. These are all in the same space, right? They're all quantum computing names, and I don't really know the differences between them. Sometimes I look at, like, what are analysts saying about them? I look at fundamentals. To me, they're all kind of in the same boat, not really a lot of distinction to be made between them. But QUBT here looks to me to be the weakest of them. RGTI may be the strongest. Yeah. So it had a big up a couple of days ago. It's a power gap. Nowhere near closing that gap. It's been doing this little sideways flag, right? Pulling back with a little bit of a falling wedge. And as long as it doesn't get any worse than that, as long as it stays above the 21 and that gap does not close, it's a buy. But that's not the one you're interested in. IONQ is, here's a nice big green stick, breakout, pullback, rounded bottom, couldn't do the breakout, and it's just been chopping around. So this is, I wouldn't call it a high tight base, but it is a tightening base. And as long as it stays above that trend line, you're okay. So if you are so inclined and believe in the fundamentals, today would probably be a pretty good day to buy new shares or add shares because it's right down into the pink zone, uptrending LRC, right at the 50-period moving average. It's not a good looking day today, but it is light volume, and most everything is not looking very good today. You do have earnings coming up in a couple of weeks. I'm not so sure I'd be a holder over earnings, but if I like the longer term story, then I would. Looks to me like the last earnings were good and it gapped up and kept going. The earnings prior to that, not so good. It gapped down and kept going. So take your coin and flip it and see which heads or tails, But if I'm out there, if the market were great today and I see this kind of thing on a dip, to support like that, I'd go, yeah, let's add some shares. So this looks pretty good to me. And there aren't too many stocks like that aren't in uptrends, that aren't overbought. That's not overbought. So Unity, we looked at this one last week. This is very good. This is very good. I don't know why it gapped up so high, but it did. That's called a power gap. It came down to test that gap, but didn't get into it. That's good. And now today, in a red market day, it is starting to bounce back higher off that level. That's just very, very good. I'm glad you posted this one. I've got it on my watch list right here, but I just haven't taken a look at it. Haven't had a position in it for quite some time. But I like this setup. I like this setup technically. Right. This is my favorite kind of setup, by the way. Big gap up, or not a big gap, but a strong move higher, and then a soft pullback into support. 21 is best, but the 50 also top of the LRC, because nearly often you get a repeat of that strong up, where you get strong up, soft pullback, strong up, then massive up, and so much so that it opened up this new gap. That's a revaluation of the company. It's no longer a low $20 stock. It's now a mid $30 stock, and the market really, really likes it. Really likes it. All right, so I might even get us into some Unity. Anyway, we'll see. All right, guys, that's about it. I'll do one more here. Nail. So Nail, of course, is the leveraged ETF for the home building and other related names. I've been waiting for the home builders, and I think they're going to have a good late summer rally. We just need to see the Fed get just a little bit more dovish, right? We need to see, and as I said, we don't want the Fed to start cutting rates because the job market is bad. We want the Fed to just kind of say, hey, we're ready to cut rates if we see the job market getting bad. That would be enough, I think, for the market to feel confident that the Fed has its back. When we see that, we also need to see yields come down. We need to see mortgage rates come down. We need to see that 30-year bond come down. And they're not. They're just, as I showed you before, these yields are strong. So, but when that happens, you're going to see home builders really catch a nice bid, because the value there is incredible. They're still building lots of homes. We're in an area in Southwest Florida where they're building like crazy. And I do think they're going to have a really good moment, just not yet. So that's the truth for Nail as well. I wouldn't buy it here. It's not a bad setup as far as like a rounded bottom recovery play, right? Here's your rounded bottom. Here is your broken trend line to the upside with a retest. Nice big gap up, and that gap is holding open. You see how that's holding open right there? That's what you want to see. And a little bit of a bull flag forming here. Yeah, I like it. Actually, technically, I think this is okay. I wouldn't be against anybody buying here or adding or holding. I'm just thinking about the headwinds coming at the housing sector, and I don't think we're quite at that place yet where we can confidently buy and swing trade the homies. All right, guys, I'm going to let you go. God bless everybody. Sorry about the microphone problem, but we'll try to work on a fix, and we'll go from there. Let's trade the last hour together. God bless everybody. See you back in the room in a little bit. Bye for now.